Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Thursday, June 24th, 2021. The updates lately, including this one, have been a lot of the same. I'm focusing on uh, a little bit more of a macro picture when hit and run opportunities present themselves like they did on the cryptos yesterday or the day before. I always jump on those, and sometimes it's part of trading. You can't force a trade. I've always said that. You just have to sit back patiently and wait, and you can watch setups, and then all of a sudden something drops to a support level or breaks out, and then you need to jump on it. So I'll continue to post anything I see, and I have been sitting here all day struggling, looking for something different, some new trade opportunities. A couple things jotted down on my notepad I may get to here. Nothing super compelling that stands out. So I will just do a quick update there, share a couple trade ideas, new ones, and update some of the things I've been watching. Same old on the S&P 500, and keep that in mind. There's a couple factors in play right now. Number one, it is the summer. We're in the middle of the summer doldrums. It is the end of June. We got the 4th of July coming up soon. Typically, the market's almost flatline, and they have this year. I mean, that's every year is different, but historically there are some pretty fair regular patterns around the holidays and in the summer and different times of the year. And so far, this the doldrums have continued. As talked about it, we've been moving mostly sideways for months, so keep that in mind. Okay, so as you guys know, when volatility spikes, and that's the other thing I'll show you right here, when we look at the VIX, that's when you'll see all of a sudden going from one or two posts that I make a day on the site to multiple trade ideas, multiple updates, 3, 4 posts, 5 a day sometimes, and that's just not the case. So again, if you trade a long time, you'll know, and it'll probably click now if it hasn't. This is when the trading ops occurs, when you have big spikes in the VIX. The bigger the spikes, the better. Also, sometimes on a falling VIX, because that means the market may have fallen to support, and then the long side trades explode. But when you're down to the bottom of a trading range, it's a support on the VIX right here, big support level 1622. I talked about these fairly regular patterns here that typically occur about every couple months where you get a spike in the VIX. You look kind of like a quirky EKG, and we did have one recently, and it was a decent spike, but it didn't follow through. It was from low to high, it was about 42%, but that's typical VIX. 42%, as big as that sounds, is not a huge move for the VIX. The VIX can go up several 100% in just a few weeks during the right times. So just want to point that out. So it's a good time, to get some time outside. Get some, don't sit at your desk all day if you're a full-time trader. Even if you're a part-time trader, believe me, I'm watching these charts. That's what I do for a living. And when the time is right to actively and aggressively engage the markets, we'll do that. Until then, once again, it could be later today, it could be tomorrow, next week, where I come across something and boom, post it. I try to get trade setups out in advance, so they're you have the setup ready to go. I know some probably got blindsided the other morning when the cryptos fell to support. Although those are the same levels I've covered for a long time, but we had that final kind of drop down and then we bounced off there. So I just wanted to share all that with you, and now let's look at a few things. We'll do a quick update on the markets. Won't be very long because there's still not a lot to talk about when the markets are, pretty much grinding slowly. We're still back testing as we have been for the last 3 days. That minor trend line on SPY 123. Just last week, I threw it out there, figured put a call. I think that might be the top of the S&P. Well, if we go up much more, it's not going to be where we're almost to where we were last week. So if we go up just a little bit more, I was a bit early, and if we go up a lot more, then I was dead wrong. So, and I also couldn't say it with 100% conviction. I mentioned that at the time. There's hard sell signals, what I call, and then soft sell signals, and then at the end of the day, there's always development. So one of the reasons that I made that call is I finally got my long-awaited sell signal in the financials with XLF breaking down and the industrials. That was back here a couple weeks ago, and we saw some follow through. We took out my secondary trend line, and But one of the things I mentioned at the time before it happened, and it did happen, is if tech took the baton, in other words, tech had been lagging for months, financials and industrials outperforming. XLF is a financial sector ETF, but while it started going down, then tech, which had been weak before that, took leadership, and that's what we call sector rotation. And so far, it continues to play out. So, as I said a few weeks ago, if we saw that happen, which has now happened, it's going to kind of dampen, at least for the time being, of course, it's going to dampen the case for that a correction's underway, that the stock market peaked last week, because tech is by far the largest sector at about a quarter of the returns. Out of the 11 sectors in the S&P 500, accounts for about a quarter. Then you have healthcare, financials. Healthcare at about 15%, financials at about 11 or so. I haven't updated these numbers in a little while, but and so forth and so on. So that's it. Again, not a lot of trading ops in the market, so I won't spend any more time on that other than to just show you the futures. NQ still above this trend line here. Need to see this break most certainly, especially NQ because it's very tech heavy. And if so, you have targets. We're comfortably above that level right now. We'd have to drop quite a bit even just to get back to the trend line, and we probably will. You get away from a trend line, and that's the nature of wedge type patterns. Momentum after correction, momentum and upside momentum is strong, and you're still in an uptrend, but each rally loses a little more steam. Has a little less vigor than the last one, and that's the whole nature of a wedge. Prices are contracting and building energy like a coiled spring. Then you get your breakdown, and that's why it's usually a pretty sharp and strong move. So I like to trade short, and I just as well. I love bullish falling wedges. They same thing in reverse. Energy builds, you get a breakout of the wedge, and there's your buy signal, and that's usually especially in a bull market, the start of the next uptrend. Okay, so we looked at the S&P 500 via SPY on the daily time frame, which again was back testing that secondary trend line from below. This is ES, the S&P 500 futures on a 60-minute time frame, and we had a beautiful little wedge there, breakdown, and a decent correction, very tradable correction. Hit that 41.31 support / target, bounce from there, and right now it's about an equal high and marginally higher on the futures, about equal on the cash index, and negative divergence forming, just as I told you yesterday. And divergences are not a sell signal. They can either continue to build and then lead to a trend reversal, or sometimes they get burned through, meaning you take out the previous highs on the indicators. So as of now, the divergences are still intact. So we'll see what this holds. If we get a reversal tomorrow, then we'll start to look for any other developments, and we'll watch the NQ as well. Okay, enough on that. Let's talk about where the money has been made recently. And again, just keep in mind, I told you I'm kind of, to a larger extent than usual, focus on macro trends, or at least what I call macro, not the multi-month, multi-year trends, kind of the intermediate trends. And so hopefully you find value in that, of kind of manage the commodities trade, when to be long, when to get out of longs, or stop buying longs right there, or go short. And that was at the last top of the wedge. Then the minor trend line break, the divergent high. So no update there since yesterday. I told you we hit that, backfilled that gap, and we did just come off the bottom of that channel on commodities. But when I look at the charts, and I have done that, by the way, guys, I've studied the charts of the individual commodities. Nothing stands out enough. I don't like to force trades, so I'm not going to. If you want something, just ask under this video. I'll do an update. But there's not a lot I see that's very compelling. The one I'm watching more so for a significant top when the time comes is crude oil, and that's CL, 60-minute chart. We did break that trend line right here in the 60-minute chart, back tested, and then we broke that minor trend line I gave you the other day. Nothing impulsive yet. But I still do, based on this chart, it looks like the next at least tradable pullback is coming, and I'm still looking at that 66.61 target. However, crude's holding up because the stock market's holding up. They tend to work, not always, but quite often they move together based on future economic growth expectations. So if the broad market is in rally mode or even just holding up, sometimes even just going sideways, that's usually going to help crude. And if the stock market starts to roll over next week, then this would be certainly be a trading op. And if there's anything else I can find in the commodities arena, I'll let you know. Lumber is the other one I was watching. I mentioned lumber. It's sort of cracking above that 60-minute downtrend line, but not impulsively. So as you can see here, it's above it. And I'll say this, you can take it as a buy signal. I much prefer to see impulsive buying when you have a breakout like that. But with that being said, you can certainly take a shot with a stop somewhat below. I already gave you an update on this yesterday. On the daily chart, I could see another leg down as a possibility. So once again, my convictions aren't super strong. I'm just throwing out trade ideas that may or may not pan out. Things that I had higher conviction on. Of course, that's why you had a couple posts yesterday or 2 days ago and yesterday where the cryptos hitting both of them. Like I said, Bitcoin and Ethereum, both at the same time on the same day hitting key support. Also, which was and still is, my final official target on that. I'm open to another leg down in the cryptos. I told you yesterday. I think that's probably what we get, but in the near term, we might be able to get a little more upside there, and who knows, maybe more. We'll see when we get there. So that's Bitcoin, really back where it was yesterday when I did the update. So we don't need to spend a lot of time on that. ETCG moving up a little bit more, getting closer to this bounce target zone. Around the bottom of that is about 29.44. So if it gets traction, let me add another target. This would probably line up better with that Bitcoin bounce target. So let's just say right now, let's just give this a max target right here, and I'm going to round that up. It says 34.90. We'll call it 34.94 right there. I like that level. I like it because you had a gap right here. You tested the top of that gap there, then you broke it and you tested it from below quite a bit and then rolled over. So that would give us, if we get there, about another 26%. We'll call it 25% in Ethereum. So like I said, I cannot rule out the possibility these guys just suddenly jog down and go on. I still think ultimately ETCG comes to hit this 1734-ish level plus that uptrend line I have right there. And so to me, it's a matter of, can we rally up there first, get a little more juice out of there? I think so. I think there's a decent chance, and then go on down there. So one to watch there. Here's well, technically not a new one, but an older trade. I was recycling through some of the trade ideas that I posted over the last few months. And VLDR was one of them, and that one put in a divergent low right here, positive divergence. So this is a daily chart. And right now I want to point out it is at trendline resistance, and it's coming off that divergent low. So this is a long side setup right here. You have a bunch of reactions up there, reaction there, and another reaction here. You have a what I call BOD or benefit of the doubt level there, resistance that could come into play. So you can either take a break, especially if it's on above average volume. I like to see 1.5 times better the average volume. Average volume, most brokers will provide that. It's either on a 60, 90, or 100-day average usually, and I'd like to see that increase there. Some charting programs too, like this one, also give you a volume buzz, tell you if it's tracking above or below the average volume. And so if it can take out the trend line, especially at 1228 level, do have to say too, you have a reaction high. We had a false breakout right there. See that failed breakout with that red candle? We popped it, went back. So some traders will watch that, and anything much above that would be all clear. So you maybe layer in if it pops it. And I'm going to add one more level. I haven't updated this chart in a while. I'm going to put a level right here. I'm going to call that the first target, about 1580, because you have a couple reactions around that level right there, and then up to about 1729, and ultimately about 2068. I can see that in the chart. And that would be a nice gain, if it gets there. You're talking about 78%. So that is VLDR, Velodyne, LiDAR. And another one I've highlighted for months now, and this one I've done more frequent updates on because it's just been an easy trade, is Tupperware, TUP. Had a bearish rising wedge breakdown here, went in a trading range, And you know, when you're in a trading range and it's sideways clean, you buy at the bottom, go long, sell at the top, and or go short, wash, rinse, repeat. And then when you get a break above or below the trading range, that usually determines the next trend. So there you broke down, and then again, watch, rinse, repeat. Numerous swing trading ops on this one, and told you in the last update we were up here. I mentioned that as an objective short down to the bottom of the channel, and I also said that no trading range lasts forever. That this one's getting a bit long in the tooth. Sooner or later you break out, and usually the break above or below determines the next tradable trend. Told you I favored a downside break, so you could then, if you were swinging it down to the bottom, you could just, instead of taking profits there, reversing to long, you could lower your stops to protect profits, and that's what happened. We broke it, and then we hit just above. Remember, these targets were kind of gotten away from the official targets. I'm showing you levels, and I always say the old ones T1 equals, T2 equals. If there's an equal sign in there, it means I've adjusted it. But the thing is, if 1961 is the support level, all eyes are watching. I'm going to cover that short at about 1958, maybe. It all depends on the security. And so you can see that's where we reversed, just above there. That's common. We got as low right after the breakdown as 1989 on that one. A little bit higher than I would have liked to see. But with that being said, remember the way trading works, technical analysis works. Support, meaning this $23 level, the bottom of the trading range, once broken becomes resistance. So what we did is, and I would move at this point, I would move that line up. I'm just going to leave it there because that's where I had it before, but I could move it up. So when you zoom in real tight, that's about where we bounced right here. So that really comes, we'll call it about 20. This stock, for some reason, this stock likes round numbers, 23, 20. And that would have been an area if you reversed that shy of there. I didn't do an update after the breakdown. This is the first update since back here somewhere. But boom, you would have swung it back to 23 because that broken support becomes resistance, and then you could have even closed the long if you took it at the bottom and reversed. And we're below it now, so I still say that if nice kickback rally, so we're not too far from there. You could actually short this one again. Better if you get it closer to 23, but we already hit it. I doubt it'll get to 23 again. Usually once you come to the top of a channel like that, this isn't a channel yet, but it's resistance. Usually it's a one and done or maybe a 2-3 day tag. So we already had a couple days up there. My guess is it rolls over, another run back down to 20. If and when 20 goes, and I think it will, still think this one heads down here to about 1354. That's my next target. I haven't updated AMC in a couple days. This one perplexes me. I'm favoring more downside. I don't think these, apes that call themselves are going to get that massive short squeeze they're looking for, thinking the stock's going to 100. But it's rare to see such a spike. They got, a nice run up here. Don't take, nothing to take away from there. But again, it wasn't, I know people that are in that Reddit crowd and own this stock and what their thoughts are. They share it with me and what the other groups think. We may have different opinions, and that's fine. But the fact that you got up there, usually once the buying dries up, the stock will go down pretty hard. In this case, we've gone sideways. So all I can tell you is I don't believe that this stock's going to 100. If anything, maybe you get a pop, it'll get sold into. But the level, what I can tell you is this one's in trading range, and what I've noticed, it trades well to the technicals. So here's your recent range right there. So the levels to watch would be the bottom of the range, about 5160. A break below would be bearish. Open the door for all of these next targets that are marked or support levels. And a break above 6437 would be bullish until unless it fails. I mentioned a second ago, maybe we pop it. You do have two previous reaction highs here, but you have to take it on face value. What you'd want to wait if you were bearish on this one, see a failure, a breakout, and then a failure back down below it, then that's called a whipsaw or a bull trap, and that's usually pretty bearish. So, but right now, in fact, let me, if I haven't done so already, set an alert for a break below 5160 if that happens, and likewise, I might as well set an alert for a break above 6437. And until then, it's pretty much going nowhere. You can trade the range if that's your thing, buy at the bottom, sell at the top, reverse, or stay away from it. If this is not your cup of tea, if you're new to trading and investing, stay away from it. And if you take it, my suggestion is put a very small amount, Vegas money, into this, whether you're bullish or bearish on it. And the last one, I had an alert triggered on this today, but it's not doing much. This is Hertz. I shared Hertz back here as an objective short, and that around that rally into that 640 level. We consolidated around there. It moved up. I let it go. I bailed on that one with a loss. I wrote it up. I told you to take a real small position size to allow for wider stops. But since then, what's happened, we put in nice, let me clear all the lines out. We put in a divergent high. We didn't have that before when we were up here. We were only overbought. Now at this point in time, we have nice negative divergence on the indicators. PPO just got rejected and crossed back down there. There's your divergence on price, and I have this trend line here. It's not super well defined because we only have a couple reactions back here, 3 so far, and now we're below it. But and I don't have a hard support level below horizontally, but I can say there was a lot of trades that occurred in this area. So I think if the stock takes out these recent lows, let me give you that level here. I would have liked to see better, more impulsive selling on today's breakdown. It is a breakdown. You could take it. It's just not the highest probability short entry. You know, just keep your stops relatively tight if you want to take a fuller starter position here. And then I think once it goes below, much below, we'll say 568, we'll call it 560 if you want to give it a little room. That should open the door for a drop down there, and that's a big drop. You know, if you short it here and we hit that, my minimum target would be $4, just above $4, and that'd be about a 40% drop. Ultimately, this one could go to 0. You know, that's what the Q indicates. This is a bankrupt company in bankruptcy, but so it's a Reddit crowd pushed it up here. So there you go. That's some big downside on that one. And again, Vegas money only. What does that mean? It means if you go to Las Vegas and you're going to go gamble on the slots, everybody's different. You know, some people are going to bring $500,000. Some people are going to bring $500 in their pocket. If you can, you know, fly there with that, or if you live there. But either way, somewhere in between. And so that's what I refer to Vegas money. Money that you're willing to lose if this thing goes against you. Because if you short a stock like this, and there's a short squeeze, and you are not careful, and you get caught on, let's say, the wrong side of a gap or something, you could lose a lot. Likewise, it doesn't take a lot of cash or a large position size if you're going to swing this thing down here for a 66% drop. So you don't have to put a ton of money in there to make a nice dollar profit when you have a 63% drop on a short trade. Okay, and that's it. Again, not a lot standing out now. Just trying to keep the pulse on the macro trades. Like I said, gold has softened up to a little bit recently. Still longer term bullish, and still sticking personally with a little bit of position there. Crypto's looking for most likely a little more upside than downside. Commodities, let them do their thing. They had a big run. I'm still longer term bullish at this point in time. If that changes, I'll let you know. But the risk reward in the charts, they just don't look that compelling right now. I think they may need to just grind around, consolidate for a little bit, and I'll continue to keep an eye on those, and then selectively, most likely, get back into whichever individual ones are looking the best at the time, whether it's corn, oil, soybeans, wheat, lumber, you name it. All right, we'll wrap it up here and pick this up, if not later today. If there's anything new before the close, I'll do a market wrap, and if not, we'll pick it up tomorrow. Although I will be out in a good part of tomorrow. I'll try to get an update in for you during the day. I've got to go and pick up a new boat and take it down, drive it down the river and slowly, and then we have a company coming in town that afternoon. So I'll try to squeeze in an update tomorrow, and if I don't, have a great weekend, and I'll get back to you guys on Sunday night or Monday morning. This has been Randy Finney with Right Side of the Chart. Have a great day.